All right, folks, welcome back. This is our midweek commentary for the ICT Mentorship for January 5th, 2022. This happens to be the 666th day since they announced the let's shut down everything and try to slow the spread. That's how many days it's been. 666. It's also the day where 5G was slated to come online, and a lot of FAA concern was raised, and the cell phone communication companies said we're not buying into it. We're just going to still do it anyway. So I find that all rather interesting. But nonetheless, the dollar index. Okay, you can see we traded down into the bullish order block in here. Traded off of that and came off of the lows. I like that. Buy side still resides in here, and then the draw up here still long term. That's what I'm looking for. Again, I'd like to see this stay open. In my opinion, I think the time has passed for it to have had an interest to go down to that. It should have done it by now, in my opinion. Not to say it can't do it still, but based on what we're seeing here, I like this. I would have rather seen this day go bullish, even if it was modestly bullish above the opening. But that's okay. We're still, seeing maybe the early signs of them wanting to take it up into here. All right, the hourly chart on dollar. We have the remaining portion of the buy side imbalance, sell side inefficiency in here. This is that daily bullish order block level. So we drop down into that, closed in the remaining portion of this here. And all these consecutive down close candles, that's an order block as well. So we have an order block, buy side imbalance, sell side inefficiency, or the residual portion that's left open. They came down and closed that, and we had a nice reaction there. That's really nice there. And it's not a lot of pips, mind you, but it's still nonetheless nice to see that when it occurs. So now short-term buy-side liquidity rests over here, and then the old dealing range high up here, and then obviously the objectives I gave you on the daily chart. And on the 15-minute time frame, that imbalance, or the residual portion of the buy-side imbalance, sell-side inefficiency, can be further refined into this area here, and you can see the bodies respecting that rather nicely, and then rally higher. Notice this little area in here. So there's lots of interest in this level for me personally, because that's too clean. And if we're going to run it there, why not just bump it up here? If it can get to this point, I think the algorithm will start to spool and take us up in that old dealing range high at 96.65. Euro dollar daily chart, just the opposite of what we saw on the dollar index. It's moved into a bearish order block and came off of that. So I'd like to see it come down below here and start tearing into these lows here. Otherwise, we're still inside the consolidation, and who knows when we're going to leave it. All right, hourly chart, euro dollar, all the sell side rebalanced here today, and then nice reaction there. Now today was FOMC minutes, so 2 o'clock. We had factors that would otherwise keep us out of the marketplace anyway because of non-farm payroll. So no new positions after 7 o'clock in the morning today, but open positions could be managed if it were not January. Sell side resting below here is the next draw on liquidity. And it can come up into this area a little bit, retrace a little bit, maybe the 1320 level. I like the idea of doing that. And then maybe another round of selling. All right, and here's the 15-minute time frame where it comes up and completely closes in the final portion of that sell side imbalance, buy side inefficiency on the hourly chart. Notice all the back and forth price action, okay? And then we have this exposed move right there. All sell side, no buy side offered until we get it over here. And then look what the algorithm does. Breaks. Attack sell side here. All of this in here might need to be revisited. Okay, so we have something of a breaker in here. So if it can trade up to 1320, maybe expand up into this low, or maybe consequent encroachment of this wick, that'd be nice to see that, and then sell off and attack the sell side in here. All right, British pound daily chart. I said we'd probably dig up into this imbalance between this low and this high. And we've done a little bit more of that today. Didn't quite come back all the way up to the bearish order block in here, but it did dig a little bit deeper in here. Again, not patting myself on the back. I'm just giving you, again, just a reminder that while I was not willing to take anything on this or even co-sign anything specific, just the fact that we've been going up in this old imbalance in here. And we've done, again, that very thing. And didn't quite completely close it in, but nonetheless, we've seen a market maker buy model and a further run into that liquidity that was outlined on that daily chart. On the 15-minute time frame, relative equal highs, so buy side liquidity there. Midnight rallied up, consolidation, leaves the consolidation in here. Nothing in here that I like for a New York session, so it's just more or less a move that I would be not a part of. And it's interesting to see about 30 pips or so above this high, running into that level there. Didn't quite get to the 36 big figure, but they're the breaks for you. All right, it takes us over to the discussion on indices today. Now, I mentioned how the morning session is usually the best. It's got a lot of volatility, but when you refer to the economic calendar and we see things like FOMC, something to that effect, the Fed usually does its work late in the afternoon, and it just happens to be around 2 o'clock in the afternoon, sometimes 2:30 for their conferences. But the minutes came out today at 2 o'clock, and that's exactly the window for the PM session for trading indices. So it's 2 o'clock in the afternoon, New York local time, to 4 o'clock New York local time. That's when the move takes place for the afternoon. Now, we do have some movement ahead of that, but look at the move that takes place here. You see that? That's your sell side imbalance, buy side inefficiency, and then we spike up during FOMC minutes. So we see the spike up here, it rebalances that. At the same time, notice what's going on here. Dow and S&P not showing this overwhelming desire to go higher. So the imbalance in here is just the target for the NASDAQ, which we've already slated yesterday as a very weak indice at the moment. And several hundred handles later, it declines. So this beautiful delivery here, and the order block opening right there as a discount array, as a potential area of study. You can see it down here. So nice big range today on indices. I think maybe we're seeing the beginnings of some trouble for the stock market. I mentioned that the NASDAQ, in my opinion, was the weaker of all of these three, between the S&P, the Dow, and the NASDAQ. I want you to study this on your own. Take your hourly chart, which is what this time frame is down here on the NASDAQ. And again, to get this chart is NQ. N is in Nancy, Q. H is in Harry. 2022. That's your symbol for NASDAQ futures for March delivery. Okay. You can study on the US 100, but that is a CFD, so it's not going to be mark to market like the futures market is. But for watching it real time, it's good enough. You know, it's not perfect, obviously. It's not ideal, which is what you would be looking for real time data in the futures market. But U.S. traders can't trade legally the U.S. 100 or the U.S. 30 or the U.S. 500 because they're CFD and they're basically running through an unregulated broker. And there's no exchange, rather, put it that way. So the futures market is what U.S. traders or the mainland traders in the U.S. would be required to trade through. But for the sake of studying price action, which is really the only thing that we're doing here, I'm not giving you financial trade advice. Okay, this mentorship is to teach how to read price action and look for repeating phenomena in price action. So we're kind of like fantasy football traders. Okay, somebody might ask, what's the point of being a part of a membership or a community that has a fascination with fantasy football? You can't win the NFL with a fantasy football. Well, the passion behind the game, obviously, and the affinity for certain players and such. Now, I don't share that because I don't care about sports like that. But the same reasons why folks that do that, okay, would be viewing this endeavor here as beneficial. The only difference is, while you can't win the Super Bowl with fantasy football, okay, and collecting stats and seeing if your fantasy football team would win based on whatever the real teams are doing, you can't really make an argument that just because you can't win a Super Bowl title doing that, that cannot be attributed to this, because this skill set, if you read price action well enough and you do it exceedingly well over time and you grow consistent, without saying the very words, you know what this skill set can provide someone. I'm not going to say it for you, but you know why you all joined. And it's fun. Forget the fact that there's other ulterior motives for why you joined here. It's just fun. It's amazing to feel correct about something, to read the economy, to read the tea leaves of these candlesticks. But I want you to go into your charts and study the relationship of all this price action in here with the Dow, which would be YMH2022, or you can look at it through the US 30 symbol and also compare the price action in this hourly chart with the S&P, ESH2022 for the futures market, or you can use the US 500 CFD symbol and study all of the highs in here in relationship to each three of the three major averages, the S&P, Dow, and NASDAQ. And you'll see the signatures that led to this next drop here. Is what we saw today. All right, so we're going to go over to the homework / teaching for you tonight. So now we're in 2022. I'm going to start drawing things together for you, but your mindset needs to be primed. Okay? In other words, what should you be trying to do at this stage? Because many of you are very, very close to becoming charter members, and that's why we'll be doing a little bit more of the trading model, trade plan, algorithmic principles, drawing things together so that way we can start having an executable plan of action or developing one for yourself. Okay? I obviously give you suggestions in the price action models as a charter member, but for those that are not a charter member, or those that have been a charter member and still feel like you're fumbling around, and some of that is normal because you probably rushed through the content and you didn't do a lot of the exercises or practice like I suggested you did. And I know some of you are probably beating your chest saying, I did ICT, how dare you say that? I'm not trying to say all of you, okay, but majority of the folks that are, floundering right now are probably just in need of more focused instruction, and do this, don't do that type of thing. To help you and help me as your mentor, it's at this stage where I want you to start having the visualization of your trade framework. What is it that you think your model would be based on? Now, don't be alarmed if you can't do this, because that would answer, obviously, why you are struggling looking for the things that all this core content and instructions and commentary are leading you to. There are students in 2016 that still can't visualize a framework that makes up a model for themselves. It doesn't require a lot of moving parts, but I want you to be able to visualize it internally in your brain. Okay, how do you see what it is that you see as a setup? What makes it viable? What are the characteristics? What does it look like? Can you draw it out graphically or depict it with a rudimentary idea like I'm showing you here? And maybe this doesn't make that much sense to you. You recognize certain things, but really, what am I showing you here? I want you to focus the remainder of this week until we get to Monday. Okay, next Monday, I'm going to give you basically a series each day of next week. I'm going to give you basic trade frameworks. Okay, and I'm going to show you just how simple all of this has been. Even though it feels complicated, sometimes it feels like it's over stimulation and too much information, and I'm paralyzing you with all this stuff, and I'm constantly keeping you in a state of confusion. No, I'm just giving you everything you paid for. But now we're at that stage where I'm going to start pulling it together for you. Okay? And once you see it like this and start thinking about it like this, that's the main thing. I want you to be thinking about how a trade framework that matches your personal understanding. Now, all of you are not going to subscribe to something like this one here. But even though I think this is really simple, it's basically the YouTube concepts. That's basically what I showed here. Because I don't want to overlap or give you yours. And for those that are not really that inclined to put the work in that's required here, I don't want you to say, just because I gave you this teaching here tonight or this lecture, and say, oh yeah, I'm just going to go with that one. That just makes sense. It's easy. I ain't got to put that much effort into it. And I like it. No, that's not what you should be doing. You got to be putting some thought behind it. What does your personality kind of like draw you to? Is it short-term trading? Is it day trading, scalping? Is it position trading, swing trading? And then what time frames do you have to use based on how I taught those specific approaches and styles in the core content? And then work within those time frames, what charts that you should be using, what time frames, set the framework for that style of trading. And you'll discover by testing it and back testing and looking at it, that may be your first or initial draw to style of trading. And then when you start messing with it and practicing and start seeing, I don't think I really do well with this. But you got to give it some time, a couple months. You don't just go in and like, oh, I just did this for 3 days or a week or two, and it just didn't really sit well with me. That's not really putting the effort in. Okay, so you got to really make a conscious and honest effort to kind of like back test these ideas. But putting that aside for a moment, right now I want all of you to spend the rest of this week and throughout this weekend to try to outline what it is that makes up what you think you understand is your setup. What's the framework? Okay. Now, it's at this point we're not expecting, and I'm not expecting, the actual brass tacks all the way down to the minute detail. Okay. But just a vague understanding of what makes a trade framework viable. Okay. Why should something unfold a certain way? Okay. Because if you can't do that, if you can't at least get to that point in all of the things that I've been teaching you, that right there highlights what you're lacking. Okay. And it helps me as a mentor help you as a struggling student. So, but for you to get a baseline understanding and evaluate your present understanding of what it is I've been teaching you, you have to do these things. You have to test yourself and say, okay, what do I think I understand about the marketplace and the things that I've been learning from Michael? What makes that a trade framework? Okay, and then be able to visually draw it out. Now, I'm not asking you all to be Picasso, and maybe this isn't that great of a rendition of what a trade framework may look like. But as I outline it and discuss it, it'll make more sense to you if it doesn't already. But it doesn't need to be artistically correct. Okay, as long as you understand what it is that you're diagramming and you put into your study journal, I promise you a year from now, when you do this exercise again and you graphically describe visually, like what I'm showing you here, what your trade framework is, it will look much more refined and much more detailed. And you'll know more about what it is that you're looking at as a trade framework than the initial attempt at doing it. Okay? So what is it I'm showing you here? You need to be able to show or outline, draw it out. You just look on a piece of paper in your study journal. Do this on a single piece of paper, like a rough sketch, okay? Because you don't want to draw something and make a mess in your study journal. At least I wouldn't want to do that. So you want to have just a piece of paper or a couple pieces of paper, and then draw out the idea of what you think you're looking for as a setup. So over here, this is a crude depiction of a daily chart. Okay. Now, each one of these candles represents one day. And the idea is that we're seeing a market that's been going higher. And the market has traded lower here, since this candle here. It traded lower. In the next candle, we worked inside the upper portion of the down closed candle. That's a bullish order block. So that high, or the opening price, extended out in time, as long as we're trading below that, while it's bullish, we have a swing high here. So there's buy side liquidity resting above that. So the framework will be buying inside this down closed candle, expecting range expansion on the upside to trade above this short-term high for buy-side liquidity. That is the easiest, most simple, direct bread and butter setup that I basically outline in my free content on the YouTube channel. Now, let me say this, okay? This might be what some of you have reverted back to. Even going through all the content here, you've learned a lot of things. You've learned a lot of things about bias. You've learned a lot of things about analyzing and looking at how the macro market cycle through a whole calendar year impacts trading and when to avoid certain times of trading and such. But it makes sense for you to go back to what you learned on the YouTube channel. And if that's what you're seeing here, well, congratulations. That means you understand that model on YouTube. That is enough. You don't need to be able to do model number 6 or 7 as a charter member. You don't need that. You don't need to be able to do model number 1. You don't need to be able to do model number 2. You don't need to be able to do anything else. You just need to find one thing that fits you. And if this doesn't fit you, that's okay. But I'm going to show you how you can take this rough depiction here and apply it to any of the approaches of trading. But for now, this is a simple short-term trading to day traders model. And the expectation, again, is on a daily chart, this candle here, before it forms, we have already created a swing high. In other words, imagine this candle hadn't started yet. So this candle closed down, and we're waiting for the new trading session to begin. So the next candle, it opens, and we're in here. Now, some of you may say, well, the candle wouldn't open like that. You don't know that. This could be a Sunday, or it could be a Monday, or it could be a holiday. It could be anything. Okay? So don't try to read too much into it and play, quote unquote, devil's advocate here. I'm giving you the framework on how you need to outline the model that makes sense to you, or what it is you're looking for. Okay? What provides the framework for a setup to be even considered. Okay? So we know we have a swing high here. We know we're expecting price to go higher. Okay, that's the crude depiction I'm illustrating in here. And what do we reach for? Premium arrays. So we have an old high. What's above that? Buy side liquidity. Now this could be just as well something over here to the effect of relative equal highs. Or it could be an imbalance up here that it could be reaching up into. I'm just keeping it as bare bones simple as you can possibly make it. It's an old high after a swing high is formed, and it's likely to go higher because retail would see that swing high as a top. And we like to see those things get ran out. And that expansion in here on this particular day, over here, this day may form on intraday data a 15 or 5-minute relative equal high inside this one single candle, which would be represented like this. Okay, so this over here is this candle. Part of this decline in here would be this down day here. And then after midnight in New York, we have a turn, short-term decline, and then it breaks market structure. So right in here, that's when your idea becomes potentially valid, because we have what? Relative equal highs here on an old daily high. So this would be like, say, I don't know, 15-minute time frame or a 5-minute chart. Okay, all of this idea. Okay, so you're visualizing what the trade setup would look like. Notice it's not an actual chart. The same thing that you're looking for, like a hunter when they go out and they start tracking their prey, like you're hunting deer or you're hunting elk or bear or whatever it is that you're a hunter. You need to know what that footprint looks like, and you need to study it intimately. Study it in mud that's wet, dry, dusty soil. Okay, and putting the work in, training your eye what that footprint of that specific animal looks like, that's requirement. Okay, you need to be able to do that. So if I were a hunter and I'm training you to do that, I can't make you practice to study what that footprint would look like. You have to do that. So that's what back testing is. Over time, you're going to see these recurring and repeating phenomenon in price action that are very generic to something what I'm showing you right here. If you get a break in the market structure, in this low that forms in London, and we had the break in market structure that trades up into ahead of 7 o'clock in the morning New York open, then we have a decline trading down into, in this range here, if you have a fair value gap or an institutional order flow entry drill, that is an idea that would be a viable trade framework. You would expect to take a long in here, trusting that the London low will not be violated, and this down closed candle, I don't have it in here because I don't want to have too many lines to just distract you, but we would be driving into that order block here, this down closed candle, with this movement here. So that drop down, again, all this movement here, that would be potentially this down closed candle on the daily chart. So all this decline, then we have a short-term high form, and it starts to drop down. That's your Judas swing after midnight, and it's digging into the order block on the daily chart. So we're in a deep discount, knowing that we're likely to trade up into these relative equal highs because that's the same thing as this daily high here. So we're visualizing this range expansion before it forms using an intraday chart, maybe 5 or 15 minute time frame basis as being described here. So that little decline that takes place there, the pattern that you'd be looking for the framework might be a New York session fair value gap or institutional order flow entry drill. So you'd be buying in here, and your stop would have to at least refer to this London low and trust the fact that it won't likely go lower. And as it moves higher and it goes towards these relative equal highs, we would expect a great deal more expansion and speed getting up into the London close time period, which is essentially 10 o'clock in the morning to noon New York local time. And then reaching up into that buy side liquidity, smashing into that time target, buying here, getting out here with this daily chart framework in mind. So you're looking for that one particular day as a short-term trade. You can take first partial here, like it does here, and your stop would have to be kind of like where you entered because it's a short-term trade, and then look to see if you can see a continuation with another higher daily candle. And again, trying to take something out at the next trading session's New York open and taking another large portion at the next day's London close. Okay, so the details I have here is this trade is viable if it's a Tuesday or Wednesday. Now, if that occurs and you have these signatures all here in place, it's a simple strategy. There's not a lot of moving parts, is it? Now, you might look at this and say, yeah, I can see this as you outline it and draw it out. And yeah, I can see it. I can visualize it because you're showing it to me and you're describing it. But I can't bridge that with candlestick charts, and I can't see it before it happens. And I'm here to remind you, the reason why you can't see it is because you haven't at least done this part first. You have to be able to see something that has been repeating. You only see that by going through back testing and looking for things that repeat over and over again. Which PD array makes most sense to you? The fair value gap, institutional order flow entry drill, the standard optimal trade entry with an order block and fair value gap, turtle soup, buying old lows when it's bullish at London or New York, and then looking for the same idea here, where there's buy side liquidity and a time target. You're looking for these elements here. And you also know what this is. This is a market maker buy model. Second stage reaccumulation. See how I just blended everything together? Oh my goodness, it's there. Right. But I'm not including commitment of traders. I'm not putting in grading price swings. I'm not adding every possible thing because that's what some of you are trying to do. You're trying to put every little piece, or not so much a piece, but you're trying to apply every shade of color that's available to you in the palette that this mentorship provides, when you need to just keep things black and white. It's simple. Black and white's beautiful, folks. You don't need to be, a kaleidoscope of, all these psychedelic, shades of precision. You don't need that. Black and white is precise enough. And you have to start there. And over time, you'll add more color. You'll make things more refined. And you don't need all that color to be profitable. You don't need it. But you need to have the outline in the trade framework that would be understood by you. It doesn't matter if 15 other people in the forum, in your user group, don't agree with what you're trying to do or what you see as a viable framework. It doesn't matter if you agree or don't agree with someone else's interpretation, because they may make their own visualization of their trade framework public in the forum. And they, by doing so, may challenge your personal view on what it is you're trying to do. And you should not allow it to be a stumbling block. If anything, let it inspire you to consider what is it they're doing. And even if it doesn't make sense to you, don't criticize. Because if they're sharing what they see as a framework and it's working for them, first of all, if they're solid, they're not going to care if you have an opposing view. Two, this community, I don't want you cultivating the baby pip mentality, okay? We're not Forex Factory, we're not baby pips here. So everything should be encouragement and inspirational. But if there's someone that's reaching out with a struggling point, then obviously if you have some capacity to be able to help them, then that's great. But when it comes to being judgmental or criticizing someone else's framework, you don't know what these people are doing. I literally have had dozens of folks email me in the last 10 days or so, and they're all showing proof that they have passed their verification of their funded account challenges, and they have their accounts now. They're there. They're not just we passed the demo part. Like, they're there. They have it now. And I know some of them heard me say, try not to do your test for a funded account challenge during these months, but they're apologetic in their emails, and I get it. Okay, but for all of the rest of you, don't do that, okay? Try to do it in the more liquid times of the year. But I've also just recently received an email from one of the ladies in our group. And Catherine, I didn't quite say I don't have profitable traders. That's not what I said the other day. I said I don't think I have, at least I don't know, okay, that there are traders in my group that are nimble enough to be working inside that euro dollar consolidation on the daily chart. So that I want to make a very specific distinction here. But she shared an account statement that showed very, very respectable results, and she submitted that she's consistent. She just hasn't tooted her own horn, and that's amazing. I love it. I love that. It was a nice little piece of a nudge today, because I was explaining to my wife how we do have 2016 members. Not all the 2016 members, but there are some that just haven't found their way yet. They may never, okay? And if you're one of them, I'm doing everything I can, but it's not a lack of trying. It's not that I'm holding anything back, because we have folks that are doing it in your group in the 2017, 2018, 2019, 2020, and even now, 2021, we have people that are actually doing it. And they're doing it with live money. So yeah, they're breaking the rules. I'm not trying to inspire you to take live money trades and do that, because that's financial advice. I'm not providing that here. But it's gaining momentum now with other students, which cancels out the idea that these concepts are flawed or can't be transferred to someone else. And more folks are actually doing it with live money now. So it's an argument that's failing miserably for those that want to hold on to that idea that, this stuff doesn't work in live accounts, or it doesn't work in real accounts, or money that's, taxable, because folks are actually doing it. So I don't want you to make this endeavor too scientific. You want to try to keep it as simple as possible, have as little moving parts as you can. And you're going to see by doing it, or at least that's the goal here, that you don't have to have like I guess the best word I could reach for was scientific, okay, schematic. You don't need to have that. It needs to be very simple. What is the logic? It needs to be based on something higher time frame. And what is it you're looking for as a framework on a lower time frame? And ideally, you want to be able to say what this is over here, which I've already outlined as a daily chart. And this would be like a 15 or 5-minute chart. And this is enough details here. I swear to you, this is all anybody would ever need to be consistent. You don't get a trade every single day with this. You get a trade like this once a week. And that's what I teach the folks over there on YouTube. The one setup per week, this is it. This is the roadmap for it. Very, very simple. It's one way or one route to get to that. Now, what if this over here was a 4-hour chart? Well, the same thing. Buy side up here, and you see it dropping down, and you expect the same run up in here. So your setup would be 1/3 of the time expected, but nothing really changes relative to the time of day. So even if you're not using a daily chart for your underlying higher time frame perspective, and you're using it for day trading only, or session trading, swing trading, or basically intraday swing trading, this high being targeted on a 4-hour chart still constitutes a solid move here, and it doesn't really change anything. Now, if this were a weekly chart, okay, if this is a weekly chart and you're expecting this type of move, this here could become daily. And then you can take that and break it down into smaller fractals into an hourly and 15 to 5-minute chart too. So the more higher time frame you're going to be working as a position trader or long-term swing trader, the more analysis you're going to need to do versus intraday, which is, again, one of the reasons why I like teaching intraday, because it's right to the point, it's immediate feedback, you get lots of examples and practice on, and you don't need to have a lot of moving parts. And like I said, it gives you setups that repeat every single week. Everything here would be reversed if you're bearish. Okay, so that's one of the beautiful things about everything I do. I don't need to do the opposite side because it would be just reverse everything you see here. Now, again, what you're trying to do is visualize your specific trade framework. Now, if you're a charter member and you're trying to do this with, say, for instance, one of the price action models and using all the algorithmic principles and things, that's not what this is. Okay, what I'm showing you here is simple baseline trade framework. Can you visualize what it is that you're trying to find as setups? What do these setups look like from a generic perspective? In other words, if you and I were sitting at a table in a cafe somewhere, and we just introduced ourselves, and I asked you, hey, what do you do? Yeah, I'm a trader. What do you mean? I trade the markets. I trade currencies. I trade stocks. I trade futures. What do you mean by that? And as the conversation would go on, I guess I've had this many times happen in my own life. Folks will ask, well, how do you know when a stock is going to go up? And how do you know if a market's going to go down? And what do you see in the chart? What does it look like? 99.99999% of the time, I reach for something to write with, and I draw out very crude depictions of what you're seeing right here. So this wasn't just created for this discussion today. And if you've seen any of my YouTube videos where I'm describing certain profiles and such, this looks familiar to you. At least it should, because it's the most generic principle of using naked price action and incorporating all the generic market signatures that I teach you, not only in the YouTube area, but also what you've learned in great detail here. But because of all the things that you've learned, this should be very easy to understand. You're looking at a market structure break here, and then the retracement in New York, trusting the London low, bullish market structure, draw on liquidity, higher time frame structure that it It should expand higher. So while this is going up, you're not freaking out thinking, okay, this is resistance, because retail is going to see that as what? It stopped here, and it might fail to go up there. No, we're looking for this daily chart, and you're watching that daily candle. You're submitting to that daily candle doing this, running out that previous high. You're not staring at the intraday chart. You're submitting yourself to 10 o'clock to noon time and the price over here. So it's time you're holding out for, and it's going to go above here because it's this price that you're aiming for relative to the time target here. So it's time and price. That's a complete model right there. It's over. It's done. Game, set, match, done. The only thing you need here is money management. It's a specific rule-based idea, Tuesday or Wednesday, and it's done. How hard is that? It's not hard. It's not complicated. Everything I've shown you here and discussed here has been taught to you. I don't need another lesson to go and pull in and ring in as something to support it. You already understand the individual components that's being utilized here in the discussion. That is the effect of modular learning and taking things one step at a time, one piece at a pie, each week, each new month, each new commentary, bringing more and more understanding. And then, now because you have a great deal of experience conceptually, now it makes it easier for me to sit down with you and say, okay, now let's take what you know, not everything, but just take a couple things from each respective important factor that requires a trade framework to be valid, okay, and viable, and let's put them in their proper place. And this is what you should be able to visualize. You should be able to see this and say, okay, yeah, this makes sense. I can see it like this. If you can't see it like this, or maybe you haven't been able to see a bread and butter setup, conceptually in your mind, you can see it when I'm talking about on a chart. But for you to find it in your chart, that's a skill set you haven't acquired yet. And that's fine, you'll get it. But you start to be able to do that when you can visualize a trade framework here and graphically describe it and draw it out. And then use that as your blueprint. Okay? And no one sits down, an engineer that designs certain things, or an architect that designs a home or a building, they don't just sit down and write out like, hey, I want to have a building that's this tall, this many windows, this many doors, and I want to spend this much money and never spend them more than that, and it has to be done by this much time, and there you go, you're done. No, they don't do that. They go and they break it down, and they draw out blueprints and very specific elements of what should the height be, what should be the width, what product should be used in that area. And they're going through that process of creating that detail-oriented framework. So that way the builders, which is who you are too, so you're being the architect, okay? You're engineering the trader that you're going to be, that's consistently profitable. But that engineer has to know what it is, what's the outcome? What is it you're trying to do? Just like a systems analyst. Okay, when I was going to school and studying computer science and information systems, I wanted to be a systems analyst. I wanted an employer to tell me what it is they needed, and then I had to develop that system and go through the documentation stage of mapping out what it is that I need to have the programmers build based on that documentation stage. Okay, all that. What does an employer need? Okay, these are the things I need a programmer to sit down and code. But I know that trader's job too. I know how to code. So I know how to communicate with that trader, but I don't want to be doing the code myself. So I have bridged the employer's expectations, just like you are bridging your future profitable, consistent trader's expectations. That trader in the future wants to be making money. They don't want to be dabbling in demo accounts and paper trading. As fun as it is, that future trader will not be satisfied with that alone. So your job, sitting down with yourself over the next couple of days, is to have a a pseudo meeting of the minds with your future self. Your future self wants to make money. So you have to sit down and come up with a trade framework that's going to provide the framework for that to be possible. And you have to be able to visualize that for your future trading self. Once you're able to outline it here and you can draw it out and say, okay, this is what I'm looking for. It doesn't have to be perfect, it doesn't have to be pretty. Okay? You just have to understand yourself what you're looking at. You're not making this to share with other people. You're sharing it with yourself. And you can compare 12 months from now how much more radical your understanding is based on this. And don't be surprised if the framework is something totally different that's way better, because this is a stage that many of you have tried to avoid without really probably even realizing it. But you have to be able to visualize what it is you're trying to find. Now, there are some out there that have automated systems, or they have a mechanical system that just does their own trading, and they may look at this and sneer and say, come on, But every component of their automated system should have this capability. Like, they should be able to say, okay, from an automated stance and perspective, when my system or their system that is automated and it generates it like a black box for them, if they can't go in and explain to someone that would be using it or learning it, this is a element to one of the setups that automated system does. What does it look like? What is it trying to capture? What's the framework for that very thing that it's trying to do? Okay? It's the same thing here, folks. So it gives you the understanding, and again, like that blueprint perspective. So that way it allows you to build on. But you have to start from something very simple. But before you get to this stage here, you have to be introduced to concepts and rules and certain things finding their own place and knowing what that place is. So now you've been introduced a lot to core content, core concepts, and full calendar year. So now you have seasonal tendencies and factors that come in seasonally. So that allows you to appreciate more what it is that is going to be an impediment to your development and what other things are supportive to you, and your learning curve will be shortened because of the things you've learned and learned to avoid. But once you're able to do this, it will provide you a way of going into looking at past moves better, because it'll be based on these reoccurring phenomenon. And you're not chasing anything else. Your mind is fixed on this framework. And you're going to spend your time looking for this lining up. And if it doesn't meet all the criteria that you're looking for, you let it go. And you don't regret it. You don't spend time worrying about it. You don't waste mental capital on it. You know what you're looking for. You know why you're looking for it, because it's repeated in the past many times, enough times to know that there's something there that's viable. And because it's viable and you've seen it many, many times, they look slightly different each time, but they look close enough to recognize. Is every bear footprint going to be identical? No. One of them may be missing a toe, or may not have a toenail on two of the toes because it's worn down. They got into a fight or something. But you know that paw print is a bear. That hoof mark is an elk or a deer or something else. Because you have spent time observing and studying and looking at it. Examples and examples, examples. Well, same thing with price action. And over time, you develop an eye for it. But you have to have a framework in mind to at least build on. And then over time, this becomes much more refined, much more detailed. There's other factors in here that you'll have in this part of the move here that you're looking for that provides confirmation, but that's not important at this stage. Everything I've shown you here is the easiest perception of a bread and butter setup that repeats every single week. But you have to be able to visualize it. Does your understanding provide you the ability to do that? Because if you have not got to this stage yet, this is where you should be placing your focus. Not anything else. Not anything else in charter membership, because you may be paid faster than you should have. If you can't visualize the framework of your trade idea, that you've grown accustomed to. Or if you don't have one yet, you start doing it now. Otherwise, everything I'm teaching you in 2022 is just going to feel like disjointed because you haven't done this. Because you have to have a basic understanding of what it is you're trying to find in the price action. Because if you can't see this on a very broad brush idea that is rooted in sound logic, everything here is sound logic, even though it looks simple and simplified, which it is simplified, but it is still profitable. Like, I could literally take this whole business right here and I could turn this into a 300-page book and put it on Amazon and sell it for $50. And I guarantee you, I would make six figures every single year with it. Because I could simplify it, put trades on with it, show broker statements with all that, proving that it isn't just pie in the sky logic. It's something that can be literally taken and used. I can make a playlist of following the setups on YouTube, showing the trades, and say, okay, here you go. You want to learn how to do this? Buy that book right there. Done. That's an idea for you folks. I'm trying to give you ideas. There's nothing wrong with what I just told you. If you go out and you do the same thing, I'm not saying take this very thing and copy it, because there's some guys out there that have literally taken leaked videos of my core content and didn't even change it at all. It still has my watermarks partially shown and such, and they have it on Amazon, and I'm in the middle of getting Amazon to strip that and pull it down. But you can do this whole thing for yourself. Strip it down to a simple approach and find a way to make money with it. That might be your way if you don't want to do funded accounts, okay? But you want to get your own scratch raised, your own money, your own, your WAD, your bankroll, whatever you want to call it, wherever you're from. If you want to get your capital raised in short time, you can do services where you're teaching people how to see setups with a demo account. And there's lots of people that buy that. I've made a market for that. And before I did it, nobody would consider anybody paying anyone. Oh, you're only going to talk about a demo account? Right. And it took years for some people to trust me because they could see, wait a minute, I get it. He's protecting himself. But what he's calling in a demo account is actually happening in my charts before it happens. He's explaining it. So now I've made that market for all of you. All of you can go out there and get a service started and be within the limitations of the law. You're not operating as a financial advisor. Or you could turn this into a complete campaign that you write a book. You create a model that's simple. I don't care if you talk about order blocks. I don't care. Folks, I don't care. We are in a different kind of world right now, and I don't want any of you struggling. I've already gave you my blessing. I already gave you my encouragement. Do what you got to do to feed your family. Okay? The only thing I'm asking is don't sell my YouTube, don't sell my mentorship videos. Okay? Don't do that. The idea that I'm sharing here with this, I know some of you are looking at this like, what's the benefit of this? I want to know where to buy and sell. And if you're thinking that, you're not going to get this because you're fixated on the wrong things at the wrong time. The answer to that question, if that's what you're struggling with, you find those answers by doing this part right here. This gets you there. Seeing the logic. What's the framework? Why that move should even manifest itself in the price action. Because if you haven't identified those repeating signatures that come together and agree, you're not going to be able to make money. You're not going to be able to find a setup that repeats. You're not going to be consistent. I'm not saying you can't indefinitely. I'm saying you can't without doing this. It gives you understanding. It gives you the approach to go into what it is you're trying to do every day, practicing, studying, looking, back testing. This is the framework. This is the thing, okay? Now, once you do this, once you've identified your framework, then you have to look at the marketplace and identify the present narrative. What's the likelihood of what you're looking for potentially even manifesting at all? See, technically, this is what it looks like. But is there a narrative in the works right now that would agree with this potentially forming? And now you have a complete model. Light bulb moment. But you have to have this part first, okay? Without having this understood and really comfortable with it. Like, you should be able to whip out a pencil and draw it out, and if you're at work at lunchtime, take your time and map it out a couple times a week until it's burned and etched into your mind. And you might have more detail than I'm showing you here, but this is all that's necessary. That's all you need. You can go back and look at the last year in trading on any pair or any market, and you'll see this thing right here forming with this logic over here, or the reverse of it for shorts. It repeats every single week. I'm challenging you. For those that have a lot of time, go back and see if you don't find 52 examples of this. One every single week. It's there every single week. Now, the range from where you would enter and where it gets the objective running out to highs and going into London, this is going to vary. That's okay. It provides you a way of trusting how long you're going to hold on to the trade because it's relative to time. You're waiting for a threshold at least getting above here because it's based on this old high on the daily chart, or 4 hour if that's what it is. And what happens if this is a hourly chart and you're scalping? Well, here's an old swing high on the hourly chart. You're expecting it to rally, and you're going to take out this old 60-minute high, right? On a 5-minute or 1-minute chart, you're seeing these relative equal highs here, which would be basically something in this hourly candle. As it drops down in here, the same premise that you're looking for that is outlined that would be otherwise a 15 or 5-minute chart. This is a 5 or 1-minute chart using an hourly chart over here as your higher time frame bias, and using this time frame over here as the higher time frame hourly. So every candle represents 60 minutes or 1 hour candle. And in the same framework here, the trades wouldn't be as much, obviously. Maybe it's 10 or 15 pips, that type of move here. But that's still enough. If you get 5 of them a week, that's still 50 pips, right? Hello. Don't negate the power of knowing what I'm showing you here, because you can make this scalable. You can make this as big as you want it to be or as micro as you want it to be. The logic is still going to be there, but without having a understanding and the framework that what it is you're looking for, it will be easy for you to feel like it's impossible to ever get this. But when you sit down and you simplify everything, but you have to have some basic understanding. Because I can't just sit down with someone that's never had any time with me and explain this, because it's going to be like, what is this even talking about? Like, I don't even get what he's saying. Like, anyone that would just first sit down with one of my YouTube videos, if I had this discussion with them tonight, I would lose them. They'd be like, okay, this isn't, I'm not looking for, I need an indicator. When this is indicating everything you need to know, why it's got to be there, why it should form at that time, everything. Think about it. It's day of the week specific. It's time of day. Targets are timed based on time and price. The logic of what is the framework behind it, and it's rooted in a higher time frame bias. The only thing it's lacking is money management. And I leave that for your own interpretation, because I don't know what you're willing to risk. Some of you might not be willing to risk 1% of your account, and that's great. Some of you might want to just risk 1/4% because you have fund management as your aspiration, and you don't want to have a lot of high volatility in your equity curve. You want to see a very smooth, slow, graduated increase. fund management, that's what they look for. They don't want to see 600% gains. That's not what they want. They do not want that. As much as you might think so, that's not what they want. They want smooth 10, 12, maybe 20% at best. That's not a lot of volatility, and it's consistent. They like to see that. And folks, that's easy. That's real easy. And if you aspire to do those types of things, there's big money in that. Real big money in that. And you don't have to work really hard. But you have to have the mindset to be able to manage other people's money. And I don't have that. I don't have it. Some of you might. But there's something here for everyone. But you have to start here. This is where you go after you've gone through all the core content. What do you do next? Where do you focus? This. You have to start with some kind of framework that makes sense to you. Okay? And I'll give you 5 individual trade frameworks. They're not models, okay? But they're conceptual ideas of what it is that gives you a viable trade framework that you can use as a foundation. And then by applying present narrative of why that should even form, and I'll talk a little bit more about narrative in case you don't know really what I mean by that. Maybe you have a vague understanding, maybe you think you know what I'm talking about, but I'll kind of like bridge it together with the examples. But next week, Monday through Friday, I'll give you a visualization of a trade framework that's unique. It's different from the previous one, 5 individual ones. And I'll show you just how simple it is. You can go through what you've learned here. That way, you can go into your back testing and see how many times these things repeat. And that builds confidence. It gives you trust in, okay, yeah, these repeat. And I understand some of you are going to think, oh, well, we already passed that, Michael. We know what you're teaching repeats. We just can't do what you're doing. Well, I'm telling you as your mentor, the only reason why you can't do what I'm able to do is because you haven't done this part and submitted to that process. You're still Netflixing. You can't be Netflixing here. Netflixing is binge watching, and binge watching ICT, as much as I like the idea that you're interested, it doesn't transfer just because you watched. You have to engage. You have to do the things I tell you to do and avoid the things I tell you not to do. And by having that rooted in something simple like this, seeing it, can you really see what it is you're trying to do? Because think about it. Ask yourself, have you been up at this point of your development here in the mentorship, regardless of what year you started, have you put this much emphasis on this? If you haven't, there's your reason why you can't do it. That's the struggling point. And that's why it's important for all of you, even if you have a model that's doing well, stop. Maybe consider an additional model. Okay, not to replace it, which you've already been doing, but just as an exercise of development. Can you find yourself able to see another model in addition to the one you've already found consistency in? That's not going to hurt the one you already know. It's not going to be an impediment. It'll help you become a more rounded trader. And maybe your model that you've grown accustomed to and it's consistently delivering for you, maybe it doesn't give you a setup, on the days that a new framework might provide for you. It's not to entice you to be over trading, but just to constantly hone your edge as a trader, as a price action analyst, developing your skill of reading price action and making you a much more rounded speculator. There's no disadvantage in that. In fact, it makes you better. And that's what I spent my life doing. I took myself through exercise after exercise and honing my understanding of price action. And when I had multiple models that were very, very good at forecasting price action, really, really precise entries and real good targets, I'd say, okay, well, how can I create a model that would do well in this type of environment or this type of scenario or this type of setup? And this is how I did it. So it's important to understand when I was exposed to how these algorithms actually book, my mind jumped to these ideas like this. How can I make that understanding visually palatable where I could see it? Because if I could transfer that logic that's occurring algorithmically without any quote unquote rhyme or reason
what's occurring at those moments in price action that would be very similar each time it should likely repeat. And then because of those things happening, that's how I come up with the content you're learning here as ICT. So it's that language I had to create, that language of reading price action that all the schmucks like to say that I rebranded this and rebranded that. None of this stuff is found anywhere else. And it's interesting once you take it down to something so generic like this, how easy it is to learn. Now, if you take this part out, it's astonishing to see how many people report having difficulty learning it because they try to take this stage out of it, or they ignore it when I tell them to do it. You didn't tell us to do this, ICT. Yeah, I did. Sure I did. When I gave you the profiles, I gave them to you on YouTube years ago, and I gave them to you in the core content. How much work did you do with them? You just watch the video and say, yeah, I can see it. But big deal. I need to be able to find a buy setup. Give me a buy setup. Tell me to buy. Where's my stop? How do I get out? You jumped over 5, 6 different steps that all hinge on your understanding of doing this thing right here. Developing your visualization of a trade framework. Can you see it in your mind before it forms in the chart? What's the logic behind why it should even be there? That's not narrative. Narrative is entirely something different. But what does it look like on a chart? This is what it looks like. This is the schematic, okay, or the blueprint of why a bread and butter trade framework should provide profitability. And you can make these as complicated and complex as you want. And I have lots of those, but you don't need those complicated ones to find profitability. You need to find something that's simple, that's easy to spot, that doesn't take a lot of time to look for, doesn't have a lot of moving parts, and they repeat on all time frames. And this is one that is absolutely a dandy. It's such a beautiful masterpiece, and it's simple. Like, you literally could take everything that's outlined here and put it in a small little paragraph and write it out on the back of a business card. That is your trading plan. That's what I meant by having everything understood. And here's my card. Remember that article I wrote on when I was baby pips? Here's my card. And everything that your model or your trading plan utilizes for your trades, you should be able to condense it into a statement or statements that would fill the back of a business card up. Well, everything that's explained here, you could make a paragraph, a small little statement, condensing everything that's explained here. Now, if you hand that to somebody else and they don't know what those things are that you're referring to, like what's a break-in market structure, what's a fair value gap, institutional order flow, what is a New York session entry, what's the importance of Tuesday or Wednesday, creating the London low and expansion on a higher time frame, like what does that even mean? Right. It's unrealistic to expect someone to understand that, but because you understand what those general principles and concepts are conceptually, you could paraphrase what it is that you do as a trader and condense it down to a statement that could be put on the back of a business card. But in the hands of a neophyte, someone that's uninitiated, they would have no idea what the hell that even says or what it's even talking about. That's the same thing that happens when people come in contact with my videos, whether they're leaked or they watch a video on YouTube or whatever, and it seems complicated or it's a lot of this and a lot of that mumbo jumbo and all these names and these abbreviations and such. And they look at it as, oh, this is complicating. He just complicates everything. He renames stuff and complicates it. That's their shortcoming. That's not your shortcoming. You're initiated now. You know the language. You're learning how to take that language and make a masterpiece of your own. This is how you do it. You start with this stage here. You all have exposed yourself to all the core content. Okay? All those principles now need to start being drawn into a framework that you start looking at routinely every day. Whether you find a trade to set up a demo account entry or not, doesn't matter. You need to go in every single day with this logic. And you can start with this one. I'm not trying to say you shouldn't. I'm just saying that don't limit yourself here, because I might show you something next week in the 5 examples there for individual trade framework that will really get your gears turning and say, that's the thing. I just never been able to articulate what it is I'm looking for. And then that might be that light bulb moment, that aha, that moment of astonishment, that epiphany. I know what I'm looking for now. That might happen for you next week, and I'm excited for that. This one may have done it for some of you, even though you've probably seen everything I've shown you here before in other videos, broken out, in segments over multiple videos over years. And it feels like it's the first time you saw it here, because now you have understanding and experience that you didn't have the first time you watched all these YouTube videos. Because you've been in more structured learning here, this might mean more to you now, as it should, because that's mentoring. And others may be in here thinking, you're still talking about this thing and it's, I'm past it. And I still don't get it. Okay, I understand. But you have a job now to go in and frame out graphically what it is that you're looking for as a setup. What's that logic? And maybe one of them will appear in the teachings that I give you Monday through Friday of next week, or maybe not. But either way, it's meant to inspire you to think about it logically, so that way the framework, baseline framework that's required, because you can't expect yourself to go into the marketplace and be consistently profitable if you don't know what you're looking for. You know what an institutional order flow entry drill is. You know what a fair value gap is. You know what a buy side imbalance is. You know what relative equal highs and lows are. You know what an order block is. You know what a propulsion candle is. You know a balanced price range. You know all those things, but the problem is you don't know what to do with them. Well, this is how you learn how to do the things that you're supposed to do with them and when. So you're knowing the why and when, and what does that blueprint look like? The blueprint isn't changing. You're waiting for the market, price action, to present these conditions that would agree with this. When it fails, it does not mean that your framework is flawed. It just means that was a losing transaction. Take the next one. That's it. You're not looking to see a framework fail on the basis of valid or invalid. Because if it's rooted on things like I'm showing you here, this is sound logic. These are things that repeat every single week, folks. Every single week. Don't believe me because I'm saying so. Go back and test it. You'll see it every single week. And you'll see how easy it is to spot because you've done the back testing. And if you do many examples of doing that, what's many examples? Until you know it like the back of your hand. Well, how long is that going to take? I don't know. All of you are different. But why are you got to put a timeline on it? Why are you trying to put a deadline on it? You are exercising to get better, to sharpen your eye and your mind and your understanding about what it is you're learning here. Stop trying to make it next week you got to learn how to do it by, or it's a failure. That's a failure's mindset. I have to be able to do it by. No, you don't. Who said that? Deadlines removed in learning provide the perfect opportunity for you to grow at your own pace, and that's the best pace. That's just the way it is, folks. And you'll find that by doing this, it provides you the very thing that you needed all along to take you to the next level of your understanding. And once you get this, and you're able to frame out what it is you're looking for as a setup, it provides you clarity. You're not going to be distracted by, there's one of those other things he talks about. You're not going to care about that. You're going to be focusing on the trade framework that you trust, that you identified and you've seen many times. And you're going into price action looking for that. You're not being enticed with greed and fear of missing out because something else is happening somewhere else. You're looking for something that's going to be repeating, that is generic, that is reoccurring all the time, every single week. You're not going to doubt it because it's going to happen. And if you miss the move that takes place this week, you're not upset because you know next week it's going to form again and you'll be on that one. You see the mindset that provides you? It removes all of that struggle that you're feeling, or the uncertainty, or the fear of failing, never being able to get it. Well, that all goes away when you start doing this, because it proves to you that there's sound logic behind what it is you're looking for. And it doesn't have to be perfect. It doesn't mean that you're going to have winning trades all the time. It means that you're probably going to do something following this logic, and you'll probably lose money. In fact, I'm telling you right now, you're going to lose money. If you put real money behind this, if you put a demo trade on this, you're going to lose. But if you practice, I believe that this will show positivity over the negative. That means my faith in this is it's more likely to provide winners versus losers over a cumulative basis over some period of time. What time? I don't know. Years, decades. If you understand the logic. Now, you as the trader, the speculator, the human, may rush and think you see something over on the higher time frame over here. And you look for this over here. And it goes here, and then it breaks down and goes lower. And then now you're at a crossroads. Does this model, or not model, does this framework fail? Or did you, as the trader, fail in that individual, unique transaction? That's the discovering point that you go to next after you've done this stage. And you keep going back to the logic that's here. It's not flawed. It just means that you did something incorrect, and you have to own it. You have to own that responsibility, that you did it yourself, that you took that loss. It doesn't diminish. It doesn't remove this effectiveness. It doesn't tarnish it. It doesn't make it invalid. It just means that you did something wrong. It didn't break the framework. It didn't break you as a trader. And you're going to stick to this framework going forward. And your belief is going to be that you're going to find more winners with something that can be proven statistically in the past, even though the future is not promised to you because of the past. Okay, past performance is not indicative of future results. But it's like Larry Williams said, in video course I watched in 1995. I said this before, and I just think it's a really good example, and I'm going to close the video here. If you walk down 2 streets from where you live, take a right-hand turn, and you pass a blue house with a white picket fence, and this dog comes running up there, vicious dog, jumps over the top of the fence, grabs a hold of your arm, tears your shirt, rips into your arm, gives you 15 stitches, and you go to the hospital, get all doctored up. The next day you come out of your house, do the same walk, and this dog comes running, rips up your shirt, and tears open your stitches again. Are you going to do this 50 times before you realize that doing that same route is problematic? It's probably going to be bad for you, okay? Well, the same thing can be said if you keep seeing a positive return or a positive outcome. So if you change that storyline, because that's what you were thinking. You're thinking, because some of you are very cynical. And I was cynical too in the beginning. Because I would fail and I would think, okay, it's this thing that's wrong. It can't be me, when it was me. If you go out of your house and you go down 2 streets and you turn right and you pass a blue house with a white picket fence, and someone comes out of that home, just happens to come out every time you pass by, and they smile and wave to you. And you do this each day, and it just happens every single time you happen to be there, they come out of that house and they make a point to be able to say hi to you and smile. And eventually, that becomes someone that you get to know. That couldn't happen unless you followed that same logic that took you to that place every single day around the same time. And that outcome gives you what? A positive result, right? So what led you to that outcome? Following the process that you've seen repeat over and over and over again. Now, there's going to be 2 stories and 2 outcomes that could potentially happen. But if you have proven statistically that you can see something in the marketplace that repeats generically over and over again, you don't need it to be perfect in the future, repeating every single time 100%, because that's the job of money management. But you can't allow or appreciate the effects of sound money management, providing you the shield for you as a defense, until you at least understand what it is you're trying to do offensively. Knowing what your plan of action is. What is your expectation in the marketplace as you as a trader? Because if you don't know what that is, sound money management can't do anything for you. Because every trade you get into will be based on nonsense without statistical probabilities behind it. You follow what I'm saying? You have to have the best of both worlds. Knowing that there's a strong probability of the market delivering like this is showing you here graphically, then having the strengths and protection of sound money management, not risking too much of your account, moving your stop appropriately, taking partials, taking a trade with less leverage because you've taken a loss the previous 2 trades prior to that one. The sound money management won't be able to do its job unless you have the framework of a sound trade framework. You can't have anything in you that's going to be a weakness. You have to have strengths. And the way you remove the weaknesses and the plaguing things that affect all of us as traders and speculators is you have to identify what is weak, what is sound logic, lean on those things that are sound, provide all the necessary advantages to analysis, to narrative, and risk management. Managing your money. That stage is effective only after you have sound logic that starts from here, trade framework. Okay? So hopefully this has been inspiring. Hopefully it's helped you. And it obviously is a very simplification of something that is very effective. And it repeats every single week. So now you have something to do the rest of this week. It's your homework assignment. Don't try to rush to get it done in one day or one evening. And we'll see what we learn next week, Monday through Friday. I'll give you 5 more of these. And it'll help you see just how simplified everything can be done and reduced down to a very simple trade framework. Until I'll talk to you tomorrow. Be safe.